Welcome everyone to this session on the evolving private equity landscape in Indonesia. We have with us two seasoned investors in the region representing top global private equity firms. We have Sandeep Naik, Managing Director and Head of India and Southeast Asia at General Atlantic, and Sarab Agarwal, Managing Director at Warburg Pincus in Singapore, focusing on the firm's investments in Asia, particularly Southeast Asia. Welcome, gentlemen. And Sandeep and Sarab, you know each other well. So both Warburg Pincus and General Atlantic have been active investors in this region in some of the key sectors, including education and healthcare and financial services. Now we've seen how your investments have evolved as industries digitalize and new businesses enabling the integration of offline and online operations emerge. And we will discuss more of this in detail. But first, I thought maybe I wanted to ask you your thoughts on the back of the situation that we can't really ignore, and that is the ongoing conflict in Ukraine. It's horrific for the people. There are also warnings about longer term effects on the global economy, including, for instance, how more of government budgets will be diverted to defense instead of development, and compounding the market volatility that has been there. We are sort of expecting an impact on energy prices, inflation, and disruptions to the global supply chain, all of which are likely to affect the consumption story that investors look at. From your perspective as investors, what are your thoughts and what are you watching? Maybe Sarab, we can start with you.
Sure, Michelle. Well, thank you for having me in this panel. I look forward to the opportunity to discuss some of these topics. Look, I think, look, what's going on in Russia and Ukraine, I mean, it is really unfortunate. Who would have thought that 2022 would start out worse than 2021? And, unfortunately, that's the reality that we're all living in. Look, I think it is a little too early to predict what's going to come out of the crisis, right? It is a complex geopolitical matter, and all of us, as we're tracking the news, I think the degree and severity of impact, and how the shock waves will then kind of hit Indonesia is a little too early. I think the situation will evolve over the next few weeks. I do think, though, look, wherever it comes out, and unless we're talking about a corner case where there's a third world war. I do think there are probably some reasons why I think Indonesia might be mitigated a little bit in terms of impact. For starters, it has energy independence, and in some ways, it is kind of a net exporter of energy. So from that standpoint, while we talk about stagflation as a big risk in many other countries, and Indonesia actually could be an interesting hedge, for stagflation. I think that is certainly something that's quite unique to Indonesia. I also think as we were talking about disruption in global supply chains and kind of everything that sort of happened in China, there are kind of more and more alternate sources of manufacturing and supply chains sort of getting kind of established, and I do feel like places like Indonesia and Vietnam in particular are quite well positioned from that standpoint. So as sort of global supply chains get reorganized, I do feel like that's another sort of area where Indonesia is uniquely positioned. So look, we'll see how it all plays out. Look, if you take a 5 or 7 year view, right, really in the long run, some of this will hopefully kind of in the rear view mirror kind of look like noise. The fundamentals of Indonesia are very strong, and really in that long run, I think probably the impact is going to be quite limited.
Right, thanks. Sandeep, did you have anything to add?
Thanks for having me on this chat, Michelle. I think no kind of global conflict is good for the economy, for the investor set, or for the people involved. So I don't think it's a great thing what's going on there. It's just really disturbing the entire global ecosystem here. Having said that, I think there is a ton of liquidity still outstanding in the market. Just given what happened in the last several years, there is just a slush of liquidity that's out there in the market. And when there's a global conflict like this that plays out, liquidity will always try to find its safe havens and try to move into markets where there is perceived stability and chase opportunities where there is growth. So as unfortunate as the situation is, which is unfolding, and unless that gets drawn into a very long drawn war, which will then impact the entire globe. I believe in the short to medium term, the liquidity is going to try and find itself into large, stable markets. And I think Indonesia would be a net beneficiary of that, because the Indonesian market is a stable market. It doesn't have anything that is directly linked to what's happening in Russia and Ukraine. And it's a market where there is a steady flow of entrepreneurship that is emerging. And so I believe that the money will try and find its place in Southeast Asia, in India, and some of the markets that continue to be perceived as stable markets with a resurgence of entrepreneurship that's happening. So in the near and midterm,
Right.
if you would ask me from an investor standpoint to the context of what we are speaking today, which is Indonesia, I think it could benefit Indonesia in the short term as well as the midterm.
Right, right. So if we could use that and segue into Indonesia per se, and Sarab, if we could come back to you, Warburg Pincus made his first PE investment in Indonesia in 2015 in the JV with Nirvana to develop retail malls in Indonesia. And since then, I think the firm has gone on to back businesses of a very different sort. You've built up quite the tech portfolio. And so just to understand, what was the opportunity then and how has it changed?
Sure, Michelle. I think you're right. Our portfolio has evolved quite a bit. But really, our view on the Indonesian opportunity has remained unchanged. We've kind of prioritized Indonesia early on. We think it's one of the most attractive countries in the region. And to us, it provides an attractive combination of size, growth, and stability, and has a sizable and growing middle class population that's young, that's digitally savvy, and that has rising income. So we've kind of liked Indonesia quite a lot for some of those fundamentals that really positions it well for the long term. Perhaps the one thing that's changed is the near explosion of the digital economy that we've seen in the last couple of years. But really for us, that's something we've been kind of investing behind for the past few years. Obviously happy to see it accelerate during COVID. But again, something that we've kind of believed in the long-term potential of for a very long period of time. Look, as it relates to our portfolio, really the evolution that you see is nothing but a reflection of the systematic approach we've taken to building our portfolio in the country. We started with one sector, real estate, which we do believe is the best way to play emerging consumption at scale, and that kind of led to our investment in Nirvana, which we have since sort of grown into one of the leading modern retail platforms in the country. Over time, we have now systematically added a few more sectors, right? We added TMT, we added financial services, we added consumer. Again, all these sectors we believe have a pretty interesting sort of runway and a long-term runway for growth, which kind of then sort of allows us to make interesting investments. Some of our investments. You mentioned Nirvana. We have actually now, of the 3 billion that we've invested in the region, we've invested close to $1 billion in Indonesia. And these investments, include some of, very exciting, companies like, for example, GoTo, which, everyone knows it's a homegrown and, local champion in the country, but also some of the regional platforms like Advanced Intelligence Group, like Princeton Digital, which have sort of significant exposure in the country. So look, for us, that was kind of the natural evolution and how, kind of we grew our business in the region. The opportunity for us in Indonesia really back then and now has been kind of, really exciting, and we're kind of following essentially a plan or a strategy that we kind of laid out, for the country.
Right. Sandeep, coming to you. So General Atlantic came into Indonesia in 2016, was it? Investing in an F&B retailer. Since then, the firm has also taken on investments in businesses that are quite different at an earlier stage in Edtech, for example. And could you give us some color into the fundamentals driving your investments in those select sectors?
So Michelle, let me just remind you, we were investors in C Technologies, which was the early mover in terms of C Limited, which was the early mover in terms of technology investments here. We did that deal in 2013, and a big part of the business was in Indonesia. We then opened up an office in Indonesia in 2016. So you're correct about us opening up on-ground presence in Indonesia. And then we did the deal with the Starbucks franchisee in Indonesia. And subsequently with their tech company, Ruangguru, and recently with the Kalbe biotech deal, which we did on the pharma side. So if you think about what we represent as GA, we basically built our investment strategy on two pillars. There is always a thematic focus on sectors that are poised for long-term growth. And there we are focused on the consumer sector, the financial services sector, and the healthcare life sciences sector. And the second pillar is a commitment to partnering with technologically enabled high growth companies across the globe that are transforming those particular sectors. So we will look at fintech, we will look at health tech, we will look at consumer tech. So those are the two pillars in how we think about our investments as General Atlantic. And as we looked at Indonesia, I think the thing that we enjoy when we look at Indonesia, and as we are global investors and having done investments all over the world, and we learn from our lessons that we have learned in investing in China and India, Indonesia has probably a 7 to 10 year lag in terms of what's happening in China and then what's subsequently happening in India. So it's almost like you're looking in the rearview mirror, but you know exactly where that car is going to go. And as a result, though you have to localize your business to really make sure that the local business can succeed in a local environment, you can use a lot of the themes that have worked globally and know exactly how those themes are going to play out in the region. So for instance, when you look at our franchisees, the Starbucks franchisee business, Mitra Adarprasad, if you look at that particular business, that is just a theme that we have done globally, backing consumer foods and restaurant deals. We have Joe and the Juice as one of our investments in the US. We have Torchy's. In India, we have a food chain called Absolute Barbecue, which is all you can eat barbecue chain. And so we have learned the lessons of how do you go ahead and open these retail franchises? What do the unit economics look like? What do four-wall ROCEs look like? And we know exactly the models that would work. So when we came to Indonesia and we started looking at those businesses, we identified the Starbucks franchisee as a very interesting business with great unit economics, and that's why we did that particular deal. When we look at Edtech and our investment in Ruangguru, which is by far the #1 Edtech player in the country, and we did Ruangguru much ahead of COVID, right? So it wasn't that we did that on the back of COVID where everybody knew that Edtech is a place to invest. That investment also came from our investment that we have done in India in a company called BYJU, which today is one of the global Edtech companies. And we knew that playbook, how that playbook would play out. And as we came to Indonesia, we said, which is the largest Edtech company in Indonesia? And though it was small at that point, we said, this is the platform to back because we know the playbook on how BYJU scaled up across pre-recorded platforms, live classes, upskilling. And we said, this is what Ruangguru can replicate. Obviously catered to the local model, catered to the local language, catered to the needs of the local consumer. But the broader trend was exactly what we knew was going to play out. If you look at our deal, Kalbe Bio in Indonesia, backing one of the best families in pharma in Indonesia, which is Kalbe Pharma, we looked at this particular market and we said, wait a sec, if you look at the US market and if you look at the biotech penetration in the US market, you've seen that the industry has moved from small molecule to large molecule. And if you look at Southeast Asia, and if you look at something like immunotherapy, which is used extensively in the US to treat cancer patients, the penetration of immunotherapy in Southeast Asia is very, very low. And that is because there is no large player that is bringing some of these molecules to our region, commercializing them, and then distributing them. And in Kalbe, we found one of the best pharma companies in Indonesia that had capabilities of doing a biotech venture where we can in-license some of these molecules that are already approved in some of the Western markets, and then create the clinical studies, approve those products in a local market so that the local population can benefit from some of these immunotherapy drugs to treat cancer in a much more affordable price points. So we took the same theme of what has worked for us in the US markets and said, why can't we create something like this for the Indonesian market to help the Indonesian consumer? So what we always try to do is we do the pattern recognition of some of the large themes that have played out globally and then bring them to Southeast Asia. And in Southeast Asia, obviously the largest economy is Indonesia, and say, how do we play this for the local markets? How do we identify the local champions who can help execute on this? because the addressable market is very large. And if you can find the best people that can execute on it, those make for the best investments. And given General Atlantic, we don't have a fund and a fund life. We don't look at deals in a 3 to 5 year time span. We can come in and invest behind these entrepreneurs and stay for a very long period because our money is evergreen money. You know, we don't have a fund life. And so we can stay invested 3 years, 5 years, 7 years, 10 years, whatever the need of that particular business is. So we can have a very long-term view on real company building and real value creation in those companies, which is what really has helped us create a franchise here in the region.
Right. Sarah, maybe from you then, you know, what about lessons from Warburg Pincus's investments globally that apply to Indonesia? I mean, you mentioned prioritizing the market quite early on.
Yeah, look, I think similar to what, you know, Sandeep said, you know, a big part of our strategy is built around, you know, bringing learnings from markets such as China and, you know, India into places like Indonesia. And we do it in, I would say, 2 respects. One, in helping our portfolio company as we add value, you know, in kind of helping them move the dial operationally, right? And interestingly, look, most sectors in Indonesia are going through some part of economic evolution that's already happened in India or China, right? To be able to bring those learnings is hugely valuable to these businesses. So that's kind of one respect. And the second is, you know, kind of in building on our theses and prioritizing and predicting industry trends ahead of time is helpful to kind of bring some of those learnings. So perhaps an example I would use, and you know, I think Sandeep used some great examples from, you know, Edtech in India to, you know, Indonesia. We've kind of done it across a few sectors, but one particular one that, you know, we've done kind of quite a few deals is fintech, where, you know, with our investments and learnings, you know, from Ant Financial, which we had invested in China, we knew that a shift to digital payments and a shift to digital lending in places like Indonesia and broadly in Southeast Asia was only a matter of time. And perhaps maybe even more interesting and even more larger in terms of the opportunity in this region, because, you know, you still have economies that have, you know, dominance of cash and a financial services sector that's significantly underpenetrated. So we, in essence, started pursuing this thesis about 5 years ago. In Indonesia, we invested in Gojek, right, which has transformed its e-wallet now to GoTo Financial, which is a leading fintech platform in Indonesia. We then followed with investments in companies like Momo in Vietnam and GCash in the Philippines. You know, both these companies are dominant, #1 digital kind of financial services players in their respective countries. They're at this point doing a combined TPV of like, you know, $100 billion and above. So really sort of significant. And then more recently, we invested in a company called Advanced Intelligence Group, which operates a BNPL and digital lending business. It's called Atomi and Credit Pintar in Indonesia. So quite a few investments coming out of a theme that we had kind of, you know, learning from China. And again, these businesses are, you know, looking at large, you know, pretty massive opportunities. We're excited about them. But one thing I would say is perhaps, you know, what I'm more proud of is, you know, look, these businesses started off with an idea in another market, but many of these companies have now become best in class. You know, they're ahead of the curve. And we're seeing this interesting inflection point where, you know, we are now transporting learnings from these businesses to more kind of, you know, developed markets and growing markets. So in some ways, a real testament to kind of businesses that, you know, can be built in Indonesia. So I think that's probably one example. And, you know, there are a few others like Sandeep mentioned where we've taken learnings from real estate into some of these markets, you know, learnings from, you know, some investments in banks that we had invested in India back in the 90s and 2000. I totally agree with Sandeep that markets here are probably lagging by a few years, you know, depending on what sector it is. So quite important to sort of bring those learnings, which for us comes a little naturally because, you know, we've been active in these markets in China and India for about 25, 30 years, which kind of serves to a great advantage for us.
Right. Sandeep, back to you. I mean, I just wanted to ask you if you could talk about growth equity in particular. I mean, how that as an asset class in Indonesia has sort of evolved along with the firm's investments.
That's my favorite topic, Michelle. Growth equity is what GA has done for 42 years, right? So we have really been at the center of it. And What you can now see is almost you can pick any player and name any private equity firm or any venture capital firm. They all are doing growth equity. And so everybody wants to do growth. Everybody wants to do tech growth equity. And so it's become a very reasonably crowded market. And you can see that in Indonesia as well. Indonesia is a phenomenal market from a growth equity standpoint because it's just at the cusp of the GDP value creation for the country. From a life cycle standpoint, it is just getting onto the growth trajectory. We believe that you have another 20, 25 years of growth left in Indonesia. All kinds of models across financial services, healthcare, life sciences, consumer, retail, all of these models are going to scale up. Technology will be a big enabler of some of these companies, just given how disparate the customer base in Indonesia is and how difficult it is to reach that customer base, especially in Indonesia. Technology will play a big role in enabling you to build out some of these companies which can reach out to that customer in the most affordable and efficient way. And so we look at Indonesia as a market which is going to be a ripe market for growth equity, which is actually going to be tech-based or tech-enabled growth equity deals. And we feel pretty comfortable with that because that's right down the fairway for what we do at GA. Having said that, given the liquidity topic that I discussed earlier, people have seen what companies you can build in China and India, and people are anticipating that this is what Indonesia is going to offer. And hence, from a valuation standpoint, there's been a massive run-up in valuations of these companies, where these companies are much earlier in their phase, but getting valued as if they have already evolved to the next phase of their development. And as a result of that valuation environment, sometimes what happens is, some of the best entrepreneurs, given how easy the capital has been, may not pick the right partners to build those companies, because at the end of the day, it's company building is a difficult path to travel. You need the best investors and the right investors alongside you who have done it elsewhere, who have been a part of that company building. Both Warburg as well as GA pride ourselves on really helping entrepreneurs build those companies such that they're sustainable companies over a long run. But when there is this rush of valuation and people are just taking capital, irrespective of whether the firms have teams on the ground or not, and whether these investments have been made after the right amount of diligence, you get into a frenzy where capital gets raised at very high prices. But you've seen that happen in the global markets as well. There's been a huge pullback in the tech valuations, and you can already see that on the public side. And private markets always take a couple quarters before they adjust to where the public market valuations are. So we have just started to see some of that happen in the private markets now. So as GA, we have something called as a Pearl list of companies. A Pearl at GA is defined as a company that we have identified where we really like the entrepreneur. The entrepreneur is trying to solve a very local problem, which has a massive addressable market. So these are the three things that need to happen for us to qualify that company as a Pearl company. So we have a list of Pearl companies that we decided to stay out of because the valuations were done at very, very high prices where we couldn't justify how you can create value from that point onwards. But we know we're going to get a second bite at the apple with these Pearl companies as you see the big pullback that's happening on the valuation side. And we have a very large list for Indonesia, actually, that we are actively engaged on, that we feel will make for a very interesting investing climate in the next 6 to 12 months, where a significant amount of capital will get deployed behind some of the best companies that have been created in Indonesia, but at the right value, where investors like us will go in and be a part of that journey to then really build the sustainable, high growth decacorns that Indonesia really deserves to have.
Right, good time to jump in, as you say. Perhaps you could give us some sort of a look into that Pearl list that you
I'll
have
to do that offline, Michelle. I can't do it on this part.
Okay, thanks. Sarah, what about you?
I was really hoping Sandeep would answer that question.
Yeah.
We'll try.
Yeah. Sarah, so back to you then. Given what Sandeep was saying in terms of valuations, and lots of things have happened in the last 12 months in Indonesia, in particular. We also saw, for instance, Bukalapak list to much fanfare, but has languished quite a bit since then, and the government has also launched its own funds. I mean, from your point of view, what are the implications for PE players such as yourselves?
Look, I think it's hard to disagree with the valuation point, right? I mean, some of the tech valuations, which were kind of a natural byproduct of, what I mentioned earlier around the explosion that we saw in the digital economy, right? So I think that is spot on. I do think for us, where valuation is only one piece of the puzzle, right? I mean, it is the opportunity for value creation that ultimately kind of brings home our returns, right? So in that respect, I would say a couple things become important for us. One, when we are investing in some of these companies, we would go and, pitch to the entrepreneur our value add. And we have now at this point, with almost a decade of investing in Southeast Asia, established a strong track record of really adding value to companies. So if an entrepreneur is looking to maximize the last cent on the dollar, we're probably not the right guys. But if looking for someone who can really be with them, alongside, particularly through challenges in their journey, then we're probably the right partners. And that has allowed us to find some interesting opportunities that we've been able to disintermediate, the brokers from. So I think that's one piece. The second piece, I would say, is, like I said, opportunity for value creation, right? And in many of the businesses, while we are betting on the management team, we're also betting on ourselves, right? So in some ways, if we do feel there are sectors and opportunities where, we can bring in something that is kind of, helpful in moving the dial, like I mentioned earlier, again, kind of becomes an additive factor to getting to our target rates of return. So in that respect, look, I think if it's a really good management team, good, strong opportunity, and again, not to say that we'd sort of, go breach all the benchmarks, but we've sort of found a way to kind of lean forward, and rarely looking in the rear view mirror have we had kind of, deals which didn't do well because we paid too much. We had a lot of deals that didn't do well because the management team was as good as we have thought. So I just wanted to kind of share that perspective with you. Look, as it relates to what's happened in Indonesia in the last sort of 12 months, I mean, look, I think we're all long-term investors, and look, like Sandeep mentioned, they have almost a permanent sort of, pool of capital. For us we kind of think kind of 5, 7, 10-year sort of, timeframes, and really, that's kind of more important when we take the outlook, and I think that outlook is very positive. Last 12 months, short term, I do think there have been some very positive developments, right? And for instance, the acceleration that I mentioned that happened, in the digital economy due to COVID, I do feel it's a little bit of a one-way street. I do think it's here to stay. I feel like there is a near permanent paradigm shift in the market, which will bode really well for digitally native and tech-enabled businesses. And look, I think the BUCA listing, look, I mean, the markets have been crazy and very volatile, right? So it's hard to pass a judgment on just based on how the stock has performed. But it is a great development for Indonesia, right? It does mark a deepening of access to capital for local tech businesses, which wasn't previously available, right? So, and I do think it does pave the way for many more businesses than ultimately to IPO in the market. I think the government funds that you mentioned are probably a step in a similar direction, right? Bringing more capital into the country, routing them towards businesses. I think overall it's great for the ecosystem. It's great for even private equity because, some of our portfolio companies can now tap into these pools of capital for financing. It does create collaboration opportunities for us with these funds, and also potentially an alternate and additional exit opportunities by way of secondaries or trade sales. So I think there's a certain degree of positive in all of this that bodes well for the ecosystem and the country over the long term.
Right. Sandeep, I wanted to come back to you. If we could talk a little bit more specific about some of the sectors that you've invested in. So Ruangguru, for example, and you talked about how there were lessons taken from BYJU's. In Indonesia particularly, I mean, how has the sector evolved over the last 2 or 3 years, even before the pandemic? And then looking ahead though, how as the startups start to mature, Ruangguru, for example, has grown significantly. Where does PE come in? What can we expect?
Edtech, when we invested in Ruangguru, was still a nascent stage in Indonesia. And it wasn't something that people were widely aware of, or consumers were widely aware of either. But we had seen how a company like BYJU in India could scale, and we thought that the Indonesian market is very similar when it comes to education, when it comes to affordability, when it comes to the need for education, the need for good teachers, where an aspiring student, no matter where he or she is, can learn from the best teachers that are available through that tech platform. So when we invested in them, it was still at a nascent stage. The whole sector was at a nascent stage. And we realized that if you could, as a market leader, if you could take the onus on really creating that awareness, you will reap the benefits of that as you scale. And then COVID happened. And as Saurabh mentioned, when COVID happened, everything got accelerated by 5 to 10 years. And that happened not by choice necessarily, but by the sheer need of wanting to access education, wanting to access content because schools were shut, exams got pulled back, and people just needed to make sure that their kids continue to learn. And because of the COVID acceleration, you just saw a big bump in terms of what the edtech businesses in many countries, we saw that across the globe, how those edtech businesses just rapidly escalated in terms of its traction. And to go back, COVID was so long that those behaviors now became permanent. People did see the benefit that online education can provide. People saw that as a supplemental way to progress your child in a very different, individualized, engaging way versus what you could learn just from a two-dimensional textbooks and teachers that you have at school, right? So it fundamentally changed the entire industry. And now you'll see many players that will spring up that will try and do edtech in the country. While the whole school thing was happening, what also happened in Indonesia was that the government came and said that they would want people to upskill so that they can get better employment. And the government came up with their own subsidy program to help people upskill. And here's where backing strong entrepreneurs becomes a big differentiator. At Ruangguru, the founders said, here's an opportunity for us to provide content on the upskilling side. This is not content that you need for kids in the age group of K through 12. This is content for adults who are already in jobs, but the government is saying, I'm providing you with subsidy to go upskill yourself so you can get employed in the formal workforce. And Ruangguru used that as an opportunity to then come up with content for a whole new set of customers that got created. And through that, further enhance the traction that we got in our business. So if you back great entrepreneurs and if you back companies that are addressing a real need, in this case, education, there are so many pivots you can have to your business, which we didn't even anticipate when we first came in. We never thought that we would also be in the upskilling business. And this is just a new business line that got created as a result of the situation we found ourselves in. But backing a great entrepreneur just helps you capture all of the opportunity set that's ahead of you. So stepping back, as I think about edtech as a sector, I think it's a sector that is going to be around for the next foreseeable future. Everybody understands the benefits of the sector, the efficiency that comes with it, learning at your own time, learning at your own speed, individualized learning, testing at a differential pace. And all of these just helps in terms of creating a better outcome when it comes to these individuals. And so we believe edtech is here to stay, and there'll be multiple companies in Southeast Asia that will get built as edtech giants. And in Indonesia, definitely we are backing the market leader, Ruangguru, but I think there'll be many more to come. So it's a space to watch out for.
Yeah, I mean, especially, since, as you said, there are several more players in the sector, can we expect some consolidation, especially with stronger players such as Ruangguru in a dominant position?
I would say that, you don't need necessarily consolidation. I would say that there could be many players that could come out. In India, you have multiple players that came out in the education sector. And yes, BYJU's did become a platform for consolidating a lot of those players and providing them with a platform and providing those entrepreneurs who BYJU brought onto the system as a platform to grow companies. We might see that in Indonesia. Ruangguru could be that platform that could consolidate the education sector, but at the same time, there will still be independent companies that will spring up, that will do things slightly differently and carve out a niche for themselves. So I think more the entrepreneurial activity, the better it is for the sector, the better it is for the ecosystem. So we hope there are more EdTech entrepreneurs that spring up in Indonesia.
Right. Sarah, maybe coming to you, where else in Indonesia do you see that Warburg can play a role? Are there emerging sectors that you see are still undercapitalized?
Yeah, no, look, absolutely. Look, like I said, we're big believers of the Indonesia opportunity and committed to, investing, a lot more in the country over the long term. If you were to really distill our thesis for Indonesia, I think there are two key trends that make the opportunity extremely compelling. First is around the rise of the mass affluent, kind of enabled by the expansion of the middle class. And second is kind of the rise or explosion of the digital economy, right? And to us, when you take these two trends together and you combine it with the relative underpenetration across sectors in Indonesia, it creates a very interesting and attractive opportunity with a multi-year runway for growth. So for us, as we look at opportunities in our prioritized sectors, we are essentially looking for ideas and businesses that kind of get fueled by these two sort of trends. We did talk about our tech and fintech investments, but more broadly, I do think financial services is an area that is still massively underpenetrated, right? About half of the Indonesians are still underbanked. Very few have credit cards. Insurance densities extremely low, which I think creates really interesting opportunities across, lending, insurance, wealth, if you will. I also think the sectors around, consumer sectors around healthcare and education, as Sandeep talked about, I think very interesting. There's been limited investment in infrastructure in the country in these sectors, which creates room for private capital to come and participate in a meaningful way. We also like logistics. To us, logistics is the lifeblood of not just the digital economy, but also the physical economy. And Indonesia is a complicated geography with shortage of infrastructure, which kind of creates very interesting opportunities for logistics across the value chain. So quite a few sectors that we like. We think there's a long-term potential where private equity, like us, can all be meaningful contributors in the growth and evolution of those sectors.
Right. Sandeep, what about you? What are you seeing that General Atlantic can take a bigger position in?
There's a lot we like. And given we are tech-enabled play, the key sectors we invest in globally are basically retail, consumer, healthcare, financial services, and technology. And technology is no longer a vertical, so technology is just cutting across all of these traditional sectors. But basic stuff like healthcare services, right? There's a big supply-demand mismatch if you look at Indonesia, just in terms of healthcare services. So private capital going into healthcare services, hospitals, clinical labs, those are companies that we have been very successful investing globally. We continue to look at that in the region. If you look at consumer, similar to the deal that we have done in Starbucks, there are some amazing consumer retail franchises that are getting rolled out at scale. And you can do that at scale in Indonesia. Through our Starbucks franchisee, we also signed up Subway recently. So if you look at Indonesia right now and go to Jakarta, there's a big line outside every Subway because people want to experience it. It's an experiential brand, and there's a lot to do in terms of just rolling out, 400 Subway stores over the next 3 years. So we see just continuous growth in the market as you bring some of these new retail franchises. There are some really interesting local consumer brands on the food side that you could also scale up. But outside of that, if you look at fintech, there's a lot that's happening on the fintech side, be it payments, be it insurtech, be it neobanks that have sprung up in Indonesia, trading at very, very high value like Bank Jago, Bank Alo. And that's the new phenomenon, right? That's happening. If you look at wealth management, there's a big spike in the wealth management companies that we are seeing in Indonesia that are raising capital at pretty high valuations as well. So these are all subsectors where we have made a lot of money globally. And we are watching that space in Indonesia and trying to identify the best companies that we can back that will be a part of our pearl list. If you then look at health and health tech, There's money to be made in health tech. Similar to what we have seen in some of the other markets. Technology is the last to penetrate healthcare, and if and when it does, you reach a value inflection point where you can create a lot of value through health tech. And we are seeing that in companies that have sprung up in Indonesia, like HelloDocs of the world, right? So those are interesting opportunities to continue to monitor and see at what point does monetization become real in those companies, and unit economics become real in those companies, where you can actually go and make investments to create scale. So as you look across a lot of these subsectors, there are some great opportunities, but in the end, it comes down to execution. Is there a right entrepreneur at the helm? Do they understand the local market really well? And capital is a commodity. Capital is not what's going to stop your growth. But if you have the right capital, can you allocate it to the right resources to execute on the market? And that's the job that we do, is to make sure that we can bring the right capital to the right entrepreneur so that he or she can build sustainable companies that will grow over a long period in Indonesia.
Right. So as a last question for both of you, and maybe Sarab, we can start with you first, in the sense that as Indonesia as a market matures, what is your view on exits for PE, liquidity options for PE players?
That's a good question, Michelle. And I know you have a panel just on this topic, so probably a lot more insights will come out of that. Look, I think it's a common belief that exits are hard to come by in Indonesia, which is probably true relative to a US, China, or maybe even India. But what we are seeing is, more and more investors, both public market investors and strategic investors, trying to get larger and larger exposure to the country. And to us, it makes sense because, look, there are very few markets in the world which provide opportunity for long-term growth potential at scale and have a stable geopolitical environment, right? So I do think there are investors interested and there's capital available. And I think the road to exit for businesses that are cash flowing and profitable, I think is long established. The issue a little bit, and from where this question comes in these panels, is a little bit around tech businesses, high growth tech businesses, which will probably remain consumers of capital for a while before they turn into profitability, right? And my view in this, look, I think keeping aside the current, capital markets and volatility in the world, but, I do feel like we're getting to this interesting inflection point where there are quite a few businesses in Indonesia that are getting to the point of establishing a very clear and direct path to profitability that the public market investors are seeking, which then I think will create an interesting window over the next few years to have many of these businesses sort of go to IPO. And when that happens, I do think there'll be a significant scarcity premium associated with this business because everyone's going to want to get exposure to these businesses. So I do think the outlook, I am optimistic. I think the outlook is quite positive. Look, and I don't want to trivialize the issue because I do know entry is much easier in Indonesia than exit. But I do think, look, I think for us as we invest into companies, other than hygiene factors, right? Great management team, focus on unit economics, large enough addressable market. I do think one thing that helps in Indonesia is, backing businesses that are either kind of market leaders in their sectors or have a clear potential to that number one, number two position. And I think if you have that, and look, capital markets can align or misalign, but if you have that, that does make exit a whole lot easier. That's been our experience.
Well, that really is the trick, isn't it? Sandeep, what about what's your view?
I think Saurabh covered a lot. Let me try and answer it in a different way, right? So if you think about investments, there are three ways to exit an investment. You can either take it public, you could sell it to strategics, or you could sell it to a private equity investor. So let's take all these three things and let's figure out what's happening in the ecosystem here. A lot of money went into backing early stage tech deals in the country over the last 10 years, or in the region for that matter over the last 10 years. And a lot of those early stage money was stuck, even though companies were raising money at higher and higher value, there was really no liquidity for the early stage guys. And what happened over the last 2 to 3 years is you saw massive returns that came to early stage venture capital investors. So be it C Limited, which went public and then eventually went to the kind of stratospheric valuations that it did. If you see the Grab and the early investors in Grab getting exits, early investors in Bukalapak getting exit, I think that creates a flywheel where as people get exits, they then come and invest more into the country because they believe that the grease is now working in the machinery and you can now deploy more. And so some of these key marquee IPOs, SPACs, even though the performance has been pulled back in terms of where they were trading before, they did provide a liquid instrument for people to exit. So I think that's been a great thing. And as the IPO markets get deeper and deeper, you're going to start seeing more exits and you're going to start seeing that flow in much more of a rapid way. Second is, as these companies scale and as there are great entrepreneurs building great companies for Indonesia, a lot of the pan-Southeast Asia or pan-Asian strategics start looking at Indonesia and say, why do we go and try and organically build it? We can now just acquire one of these companies, right? And we have companies in our portfolio which are already getting lots of reaches from global strategics, not only Asian strategics, saying Indonesia market is a very, very nuanced market, very local market, very difficult for us to build. Can we just buy your company because that becomes our Indonesia strategy? And so strategic exits are going to become big because people understand that this is a very difficult market to penetrate on your own. And if there's a company of size and scale that's been built, why not bring that entrepreneur into your platform versus trying to do it yourself? So strategic exit is another big exit that you could see. And lastly, you'll see that a lot of global private equity funds have raised Asia funds and very large Asia funds. And that money needs to get deployed for that money to make money. And as these large Asia funds have raised, they are looking for high quality assets that can change hands from previous investors to current investors, such that that money can be deployed. So we are also seeing a lot of inbounds from some of the global strategic funds who have large Asia funds to just kind of knock on the door and say, hey, when are you thinking of exiting some of your portfolio companies? Because we would love to just take your entire stake out. And so we believe that becomes a very readily available way for us to exit as well. So if you look across the spectrum, be it IPO, be it strategic exits, or be it exits to other private equity investors, I think that all three are pointing in the right direction, where we will see more robustness and more liquidity in the market.
Right, thanks. Good news for all, yes. Thank you, Sandeep and Sarab, for taking this time to discuss the evolving private equity landscape in Indonesia. Thank you again for your time.
Thanks for having
We've come
us.
to the end.
Yeah, thank you. Enjoyed the discussion.
Bye.